Hey, everybody. Welcome back to our very first episode of one of these advisor talks. My name is Travis. I'm joined by Scott. And today we're talking about something that we like to review every year for our clients. And it's dealing with beneficiaries on your different financial accounts and also reviewing your estate plan. So we have a few questions that we're going to go over today. We hear from clients all the time, right? About what sort of beneficiary changes they need to be making, how often they need to be reviewing these designations, and then how it all coordinates with their greater estate plan. So we're going to get into that today. Scott, how you doing?
I'm doing good. I'm glad that we're doing these. This is our first episode of many to come, and I feel like it's a great topic to start off on.
Yeah, yeah, absolutely. So we'll just jump right into it. One of the first questions that we get when we're talking about beneficiaries and how they interact with your estate plan. And Scott, maybe you can answer this one first. The question is, do your will and trust override your beneficiary designations?
And then Travis, that would be for retirement accounts and investment accounts and things like that.
Yeah, retirement accounts. We deal with a lot of IRAs and taxable brokerage accounts. So how does that all interact with your will and your trust that your estate plan had set up?
Yeah, I think that's a common misperception is that your trust and your will may or do override those, right? You talk to an estate attorney and you're excited because all of your trust documents are now in order. But then these retirement accounts, like your 401k and your IRA, those fall outside of your trust and will. So it's important that you get those updated to at least align with your trust because ultimately it doesn't matter what your trust says if your retirement account names somebody else.
Right. And so all of that coordinates with your beneficiaries, but I think it's important that you have, first of all, a list of all your accounts and then who your beneficiaries are so you know, okay, who is the money supposed to be going to and how does that interact with what I have in my trust? What we find sometimes is that people think the trust just takes care of all of those things. And in reality, it doesn't if you already have beneficiaries named on your IRA, your 401k, and your investment accounts, that will take precedence, right? In most cases.
Yep, and I think that's where it's important for our clients and people who that we service on the 401k side as well, is that things change, life happens. I think Travis, you and I both wrote about stories about where ex-girlfriends or ex-boyfriends are sudden beneficiaries of wealth because these clients forgot about these 401ks, right? They might have worked at Starbucks or Macy's when they were in high school, named their boyfriend or girlfriend at the time, and then 20, 30 years later, it's ultimately still their ex-boyfriend and ex-girlfriend. So we don't want that, especially for our clients or anybody else.
Yeah, that can be a pretty nasty surprise. If you expect to receive an inheritance from your spouse and then they pass away, but you're not the beneficiary because it was never updated. And it's an account that's, like you said, 30 years old, but it could have grown a lot over those 30 years. And now it might be a substantial amount of money. So reviewing your beneficiaries is certainly important. That kind of takes us to the next question here, which is, how often do people need to be reviewing the beneficiaries on their accounts? If you have a lot of accounts, right, it seems like could be a lot of work to actually sit down and review those beneficiaries. So, how often do you recommend people review beneficiaries?
Yeah, I think annually is a great frequency. Of course, you don't want to be looking at it daily, right? Some people they may have a fight with their family members or their kids, and they want to change it after every interaction. But at least annually is good. We recommend, especially if there was a birth or a death in the family, marriage or divorce, just any major life event, I think it's good to definitely take a look and make sure your beneficiaries are what you want it to be. So that's kind of our triggers. But for our clients, we do send out a value add, which many of our clients, it's June 4th. So many of our clients should be receiving a beneficiary value add that lays out their beneficiaries on their Schwab accounts. But we do that for our clients, but I think annually is definitely a good frequency for that.
Yeah, those life events, when they happen, good time to review beneficiaries. Annually, as you mentioned, kind of gets you on a schedule, right? So you're reviewing your beneficiaries on maybe a certain month of every year, and you know that it's going to be done, even if you don't want to do it. I think this is kind of a gloomy topic, and people don't like to think about not being here and what's going to happen to their family and to their money after they're not here. But it is important to do.
Yeah, so I guess Travis, I think life happens and maybe the what's called a primary beneficiary, the first person that you have in mind may pass before you do. I guess in that case, what happens to your account?
Yeah. So, you have, like you said, primary beneficiaries that you can name on your account. That's the first person that, if something were to happen to you, would then inherit the assets in that account. But sometimes, we see situations where the primary beneficiary passes away before you do, and then the account owner passes away after that. So in situations like that, it's good to have a backup beneficiary, what custodians call contingent beneficiaries, so that if something happens to your primary beneficiary, you have a backup person or charity named to inherit those assets. And that way you still have someone that you chose inheriting the money, and you avoid what everyone wants to avoid, which is probate. You don't want your estate entering into probate. So, when we're reviewing beneficiaries, we always look for that. Should have a primary beneficiary, right? That's, of course, you got to have that. But then also, it's good to have a contingent beneficiary on there to cover all your bases.
Travis, I think you mentioned a few important things there. So I guess you mentioned charities. Can you maybe explain more how our clients or other people can name a charity as their beneficiary?
Yeah. So charities are groups that you can name as beneficiary on your retirement accounts, on your investment accounts. And it's a similar process as naming a person, right? You need to determine what charity you want to leave the money to, get all the information right, because there could be different branches of a national charity, but maybe you want to give to the local chapter. So make sure you have all that information down. And then it's just a matter of adding them on the account. We can take this a step further too, right? If we're talking about tax efficiency, naming a charity as the beneficiary of certain types of accounts can be more tax efficient than naming a person. And the example that I'll give is if you're leaving an IRA, a pre-tax IRA, as part of your estate, which is money that has not been taxed yet. If you leave it to a person, let's say a child, then when they take money out of that inherited IRA, they're going to have to pay taxes on it at whatever their ordinary income tax rate is. And if your children are successful and they earn a lot of income, they'll be in a pretty high tax bracket. So if they're inheriting, $1 million, then it might be, much less than 1 million that they're actually netting in that inheritance after the taxes are taken out. On the other hand, if you name a nonprofit or a charity which are not subject to income taxes as your IRA beneficiary, then they'll get the full amount of that inheritance without having to worry about income taxes. And then if you still wanted to leave something to your children, you could name them as the beneficiary on, say, a Roth account or an investment account where they're not going to have to worry about taxes from the Roth, and they get a step up in basis on the taxable brokerage accounts. So that's one way that we can take it another level higher on tax efficiency by being intentional about who the beneficiaries are for different types of accounts.
Yeah, I think that raises a really good point, Travis. I think when we look at clients' accounts, there's almost like a ranking of what kind of accounts are best to go to family members, right? Children. I think you said it really well. Your Roth IRAs, Roth monies, those pass without any taxes. So that's probably the best money that you can give to your kids. Second best, as you mentioned, would be after tax or non-retirement accounts. Those get the step up in cost basis, much like your house would upon your passing. And then finally, what we're all seeing now, especially in 2026, is a lot of clients with a lot of pre-tax money. So if the goal is legacy, if the goal is to reduce taxes for your beneficiaries, that's where we've been seeing a lot of clients do Roth conversions, or at least start having a Roth IRA and having Roth monies that can pass on, because I guess we can both agree that's probably the best money that can go to the next generation.
Yeah. Right. So, while you're able to and still have some control over taxes and tax planning, filling up those different buckets, right? Different buckets of money where you have your Roth, your pre-tax, and then your taxable bucket.
And I think the main message today is just trying to be more intentional about your beneficiaries, who you're naming, and
Mhm.
also the type of money that you're leaving behind, right? As you mentioned, Travis, we don't like thinking about it. We don't necessarily like talking about it, but we know that it's going to happen one day, and we want to make sure that our clients are in the best spot possible.
So we want to, wrap it up here and leave people with some actionable steps that they can take. So for someone that hasn't reviewed their beneficiaries in a long time or checked up on their estate plan in a long time, what's one thing that they can do now to get started on that, even though it may seem like a lot of work?
Yeah, I think the main thing is just getting organized, right? If you have multiple retirement accounts, multiple 401ks, multiple life insurance policies, having a list of everything and then kind of going down the line and checking, do you know who your beneficiaries are? I think that's the perfect first step, right? I think we get a lot of mail, a lot of statements come in, but checking to make sure everything is organized. And really, that also helps your beneficiaries. If something were to happen to you, they have a 1 page or 2 page sheet that they can go look at and see, okay, where does mom or dad or brother or sister have all of their accounts? Who do I contact? Right. So I think that's a perfect first step for people to take, especially as we talk about beneficiaries.
Yeah. Yeah. And to add on to that, I would say have a list of questions that you're going to ask yourself during your review. Are when you're looking at your beneficiaries, ask yourself, well, are they still appropriate to name as a beneficiary? Are they still living? Do you want to leave them some of your assets? Are the percentages correct? If you're leaving half to one person and half to another, that's one thing. But if the percentages look off, that's your opportunity to make that adjustment. Make sure you have your contingent beneficiaries listed. Is there a way to make this more tax efficient for your heirs? So being able to take those steps now and while you still have time is a good way to do that. And does this coordinate with your greater estate plan? So knowing what your trust and your will say, do all of your beneficiaries coordinate with how you want your or the rest of your estate to be inherited? And the second thing action item is to read our blogs. We have blog topics that we write about, and this is one of the topics we talk about all the time. Is how do you set up your estate plan and coordinate that with your beneficiaries on your accounts?
I think that's a great second action item, Travis. And we do post our blogs weekly, so subscribe for more. We will definitely do more of these videos in the near future. So if you enjoy this topic, feel free to keep engaging with us on this.
Yep, yep. So that's all for now, and we're signing off for today. We'll see everyone next time.
The opinions expressed in this video are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. It is only intended to provide education. As always, please remember that investing involves risk of loss of principal and capital. Andrews Advisory Associates, LLC is a registered investment advisor with the U.S. Securities and Exchange Commission. Advisory services are only offered to clients or prospective clients where Andrews Advisory Associates, LLC, and its representatives are properly licensed or exempt from licensure. No advice may be rendered by Andrews Advisory Associates, LLC, unless a client service agreement is in place.